Morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for the 8th day of April. Well, I'm sure you're all aware of the headline, so I'm not going to repeat it, but we have a 2-week ceasefire. The markets sold off last night. Very key technical retracements. I'm going to start with May beans, traded as low as 11.40 and a half. That's the lowest price we've had since February 20th, called my 6-week low. But more importantly, it is halfway back of the entire rally we had. We went from 1050 to 1240, 1145, halfway back. Next downside risk 1125 if they get after it and sell more. In May corn, again, we traded as low as 1142. Same math problem there. If you take the January low and up to the spike high on March 9th, when we traded 476, we actually went through halfway back, which is 451. We went down and traded 445, which is 62% of that retracement. So hopefully, you did something with that rally when we had it. I know it's hard to sell into a rally, but that's the way these markets are. When you get a chance, you have to either make a cash sale or make a hedge. You're not calling a top. Hell, we could turn around tomorrow and go back to 476. I don't know that that's not possible, but it was an opportunity. Now we've given back 60% of the rally, and that's just the way the ball bounces. So lower across the grains last night, down 4.5, 4 3/4 cent May corn. May beans are currently down to 1 3/4 cent, but still lower off of their recent highs. We traded as low as 1140. We bounced to 56 and a half. That was pretty impressive. And again, typical overnight, I would call it garbage trade. I want to see how we trade later on today when the markets actually reopen. If you look at the rally that we had in wheat, specifically, we were down at, I'm going to run this real quick here right now. But if you look at May spot wheat, again, it's the lowest trade we've had in about a month, giving back a big chunk of it. May wheat down 19 cents, 579. Kansas City May down 17 and a quarter cent at 590. If you look at July, all the wheat across the board had a tremendous rally. If you follow my letter, I was screaming, yelling at people to please reward the $1.25, $1.50 rally to 1-year highs. It was an opportunity. Now, I'm not saying we can't get back there. I hope we do. But if you make cash sales or if you set hedges, now it's time to start taking a look at how to manage those hedges. In the stock market, up 1,235 points in the Dow. The Dow had a 10% correction. It's now recovered over 50% of that 10% correction. Remember, we went from 50,585, traded as low as 45,000 on March 30th. And here this morning, we're at 48,000 and change. That is a good retracement. Really a kind of a textbook 10% correction. And we have now clawed back almost 60% of it. If we hit 48,472, that'll be 62%. That's probably the next technical target. But 47,800, that was halfway back, kids. And the same math is true for the S&P 500. Recovered over 60% of what it lost on its last correction. We're sitting here this morning at 68.47. On the low on March 31st, we traded down to 63.53. So that's a heck of a recovery. And you're probably going to see more of that money chasing money. The big driver, obviously, crude oil. Crude oil traded as low as 91.05 last night. It's traded at 93.30 right now, down just about $20, $19.63. Not too much to say about that. I mean, it was completely about, were we going to go to a higher level of war or not? Yesterday's high in the crude oil was 117.63. Last night's low, 91.05. No two ways about it. That is a big reversal. And that is why I will be concerned that you may see some of the speculative money that came in on the long side in the grains, are they going to hang around and stay long? Are they going to wait for, good exports? Are they going to wait for the USDA? Are they going to wait for a different acres report in June? Are they going to wait for a drought? I do not know. So we're still higher than where we were on the January lows. There's still some meat on the bone there. There's no sense in crying over spilt milk or kicking holes in the wall on your drywall. You just have to repair the drywall later. So let's take what they give us. Let's keep our upside open, and hopefully, you made some cash sales back there when we had that good rally in the grains. It was a good opportunity. Certainly, anybody that was reading my letter. I mean, I wasn't calling it top, but I was like, you got to do something to reward this rally. Uh, in the protein complex, we were lower yesterday. I would be very interested to see if we get a turnaround here in the protein complex, just because the Dow and the S&P are sharply higher. That's going to be something we're going to continue to watch here today. We open up in about an hour. If you're not getting my letter, go to robinsonagmarketing.com and sign up. If you want to talk to me specifically about my cash show racks, about the hedges that I like, about my experience, how I got to where I am today. I started back in the Board of Trade in 1991. I traded my own account until 2010, 2009 actually. 2010 onward, I've worked with farmers and producers. So for the past 16 years, I've worked with farmers and producers, not telling them where the highs and the lows are. Nobody can do that, but I'm helping them manage their risk and avoid making bad emotional cash sales. That's really what a good marketing plan is all about. This is Chris Robinson, 312 638 8868. If you're looking for help, give me a call. Have a great day.